Hello everybody, and today we are going to do a little education about puts and options because I have gotten recently a good comment from Daniel on X on 20th of January, and he says would be appreciated if you can put a video on how you can do puts positions trading. What's your strategy? That's a very nice niche for short-term gains if you want, of course. So I think this is a good idea to extrapolate a little bit. And he did give me this comment because I did have a good score last week with short-term options. As you can see, I've posted them here. They're for SPY, which is basically the ETF for the S&P 500, and I did only 1 week expiry date options, and I bought puts with 680, and I bought them on Friday. And over the weekend, there was this big gap actually, and on Monday we opened quite lower, and instantly when we opened, so basically over the weekend, I made 135% gains on these short-term put options. And I closed them immediately because I do have an experience with short-term options. If you have any gains in the short-term options, just lock them in, because usually they expire worthless. And actually, if I would be keeping them until the 30th, they would expire worthless. The expiry date was the 30th of January, which is basically like today. 30th is a Friday, actually. Sorry. But they would expire worthless if I would have just hodled them. So my number one point for you to write it down: if you have returns, and especially if you have some shocking returns. I didn't expect to make 135% over a weekend. Oh, come on. I didn't expect that. If you have a good profit on short-term options, lock them in immediately. Even though, of course, I could have locked them in for like 300% maybe, or 250, because we were dropping the next day as well. But anyway, today's I am not going to be talking excessively about the short-term options because they are really niche. They are kind of extremely risky. Like things like this, like it happened to me, this is not going to happen to you so soon, so lightly, so easily. And it's not going to happen to me again so easily with the short-term options, okay? So if you want to make some money, or even consider, or even or aim to make some money, you're going to need a strategy about long-term options, not a short-term options. You can do short-term options in a special circumstances, but when I do them, for instance, I don't even expect to make money on them, real money. I do a very short position, very small position, and just for 1-2 days, I do a expiry for like a week, and I just hold them for 1-2 days, and then I log them in, close them. So I'm not going to be talking about the short-term options. That is not where the value is. That's gambling, I could say. However, the long-term options, there is a way, and this was a question about puts, and so it happens to be, what is right now in the bubble? Okay, so what is in the bubble? Surprise, surprise, guys. What are we going to be talking on this video? And we are going to be talking about the precious metals, and especially the king of them all, or queen, gold. I do the courtesy to myself, I'm feathering up here, because I want to open up. We are 5,500 gold right now today, and I want to open up saying, guys, that I told you so. I want to open up saying this was on 20th of October 2025, when I was doing daily videos, not weekly like I'm doing now. I was doing them daily, and this video got like 40 views. And I told you so in that video, and I ended that video, I just rewatched it. Like, don't be surprised if you see 5,500 gold in 2026. Little did I know it will be January, little did I know, but I did, and this was not the only video, only bullish video about gold and silver I did more of them. and people just ignore them all. Now people are paying attention to them, I guess. Anyway, now is the right time to start talking about puts, because this is parabolic. What we see here on the chart, this is how Bitcoin used to look like a couple of cycles ago. Like at the end of the cycle or so, you know, or at least in like the first half, like when you had the parabolic year of 2017, there was like 2 big moves, or 2021, there was a 2 big moves. So this is like the first move. So what I also think is going to be happening this year, that we are going to basically correct, and we are going to come back, make probably even higher high. I'm not sure how high that will be. Could be over 6,000. And then in 2027, we are going to correct, in my opinion. Also, I could go into a different topic, like where do I believe the gold is, but that would make this video far too long. It's already getting long, so let me get to the point about the put options. So first of all, if you want to do puts, you need to have the crucially, because where the options are the most difficult is the timing. Because many people get things right, like yes, this is going to correct and it's going to correct there. But to estimate that correct and at the same time to estimate the timing correct, like what timing will it happen, to get both of these correct at the same time, that is difficult. And that is why it's so hard to make money on options generally, and on puts even harder than on the calls, because generally it's much harder to make money on something going down, and actually you can't, I've never seen anybody who got rich by something crashing. I've seen everybody who got rich, I've seen it on the bull market, basically, in the bull market. So the first question you have to ask, what is your estimation where gold is going to be correcting? So I use also Confluence with the other work that I do, and I can do a separate video about this, but today, just for the purpose of this education about the puts, I'm going to just tell you the result, not the thinking process. And I believe, based on my work, I believe that 2027 is going to be, and potentially 2028 is going to be the window where gold will have corrected already. So not just will be correcting, but already will be, maybe that correction will be bottoming, because that's where you want to lock in the profit from the puts. Okay, once the correction will be bottoming. Now I have to make sure that I'm on a regular scale. I am on regular. I know you can't see that part of my screen. This is regular. This is not logarithmic. And I'm going to estimate where the bottom of the correction of the gold is going to be. And I'm going to do a very simple measurement. The most simple measurement probably there is. And actually, I'm going to do it on the GLD, because I'm not going to be buying puts for gold. I don't have experience with that. I'm not even sure I have the permission to do that in my broker. But I do have a permission to buy options for GLD, which is the gold shares, the SPDR gold shares, basically. It's the ETF, right? So I am going to be doing puts there, and the simple measurement is to take the bottom of the move. And again, now it's very important for you to have a good opinion and a good eye. Where is the bottom? You could say that this is the bottom where I have it anchored. It's like the middle of 2022. You could make a case it's from here, it's from October 2023. And you could even probably make a case that the move is from all the way here, from September 2022. And then the measurement is different for each. Okay, for the sake of this video, let's just take this one. So I'm measuring from October 2023, and I'm measuring the top as it is today. Okay, this top can go higher, as I've shown you what I expect about 2026. I'm pretty sure this is not the top for the year. I am pretty sure about it. However, this could be like close to the first top. There could really be like a double top, like Bitcoin used to be having 2021, 2013. The same can be 2026 for gold. So the first top could be somewhere around where we are. So I'm measuring the top as it is today, as we know it. And of course, the level that I'm looking at is the 0.5 of the fib. So basically, I am now aiming that in 2027, because you cannot buy more than 2 years away of expiry, at least not in my broker. So I have to be, if I want really long-term puts, I'm gonna be doing expiry date January 2028. So I am going to be believing that in 2027 we are going to see 338 GLD. Now you have to go to the broker, or I have gone to the broker, and you have to see what are the options, what are the put prices today. The market is not opened in the hour of recording of this video, so I can't check it right now, but I've seen it like as it was yesterday. And yesterday, the price was lower. Okay, the GLD was lower yesterday. It grew quite a lot since yesterday, so the price has changed, of course. But yesterday we had 350. So I will put this line. Okay, I will make a new line because this line is quite important to me actually. So this is the line I am doing. I will do a white line for you, and okay, like this. This white line is what they're talking. So this put options yesterday, I will also write a text here, cost about, this contract basically cost about $1,000. Okay, the put contract with the expiry date of early 2028. So how valuable, if I am correct, how valuable is it going to be once gold corrects? So if I am correct, and if the gold corrects to 338 GLD, I mean, okay, sorry my language, if the GLD corrects to 338, then basically this option is going to be worth $1,200. Okay, however, I have to also move this lower, because when I was measuring it yesterday and when I was calculating it yesterday when I was doing this calculation, we had the top of the GLD around here, actually around there, and there the target that I was aiming for was 325. Let's do that into the text here. Oops, so let me write a text. So we could buy 350 strike price, puts, GLD, expiry January 2028 for $4,000. Okay, and the target is when GLD corrects in 2027 to 325 roughly, or 224, are puts basically just by even not taking into account the sentiment, just how at least what is going to be the least value this put is going to have if the GLD corrects to 324. So by just basic math, it's $2,600, right? So this is more than double. Okay, so this is a very simple math, that you do, and this is basically the strategy you could follow. Of course, if you are wrong, and if it's not going to correct this low, you need to know as soon as possible. But there is pretty good chance that even if you are wrong, there is going to be some corrections along the way. Even if the gold will not come to our line, like it's going to do something to the downside. So you will be in gains in those times, and you need to then realize that, okay, I'm likely actually wrong with this target, and then you can basically still not just break even, but still lock in some gains. However, so it requires active management from your part. This is not going to be like Ethereum old days when you bought 150 Ethereum and you sit 7 years on your ass and just be bullish. This is not going to be that. This is not going to be that simple. This is going to require active management because you need to, this is time based. You know, the time is ticking. When you are holding an options, the time is ticking against you. Okay? So, and that's why when you do a long-term puts, you have the most time possible, right? To be correct, to be right. This is the basic math, and once you are correct, so let me do a different color here with green. If the GLD goes to 324, sell at least half of the puts for double. And this is the final point I'm going to make. This is the goal of the whole strategy. If you are right, if you got the timing right and the strike price right, if you got these two things right and the gold will really come there, you will be at least doubling whatever you bought, whatever you paid for those puts, it's going to be at least doubled. So you can easily sell at least half of them, and you can cover all your costs, all your investment costs, you can have it all back, plus inflation, most likely, so something on top, and you can keep left the other half of the puts running. You know, you can keep them running, because in case something really bearish happens about gold in that time, like, I don't know, Bank of America says it's going to be selling the metric tons, something in that regard. I don't know what could get wrong with gold, but something like this, or that Trump is going to be confiscated your gold if you hold it, or something like that. I don't know. So if something like this happens and the price dips way lower, you know, then the puts that you hold, like, you will be surprised, you would be shocked how valuable they could actually become. Because like, for instance, I have drawn here, this is going to be my last point. This video is already very long, but this is education video, so 20 minutes is fine, I guess. Like, for instance, this trend line, look, I have connected the bottom of 2018 and the bottom of 2022. Like, this trend line is not, it is not 0% chance that we will not hit that trend line ever again. It is a very small chance in my opinion, but it's not 0% chance. Or what about the 0.786 level on the FIP? Like, that's a magnificent level, but of course it's going to be higher because we already are higher than we were yesterday. And let's say that the gold, I'm right, and gold goes much higher, and this GLD goes much still higher, over 6,000, 6,500 even. Then this 0.786 is here, and imagine that is then hit. Okay, imagine this is hit. Imagine the GLD is 263, and you have still some put options that you opened right somewhere here at the top, and you have 350 strike price. Imagine the value of those. Like, holy moly, like, let me count it. Like, this is going to be like $8,700, I guess. $8,700 would be, right, if I count correctly out of the top of my head. $8,700, and you bought them for 1,000. So just give you an idea and an illustration, and I really hope that I also satisfied. It was a good comment that I got from Daniel. I was happy to get it, and it was also it inspired me to do this video. I hope you enjoyed it.